Gold and silver are being repriced. You can only manipulate a market, and it's not debatable any longer. It isn't, that the market has been suppressed by Western central banks for various reasons. Gold for one reason, silver for another. I argue gold because of something called Gibson's paradox, the inverse relationship between real interest rates and gold. This is how you support the illusion of strength of Western supremacy in bonds and currency, and the military-industrial complex needing wicked amounts of silver to make high-tech weapons. That's why they've suppressed it. And for years, no one ever challenged. No one stood for delivery. But many of the countries that, when I was a kid, were third world, such as China and India, are now leading the charge of physical delivery. And not only that, they are coordinated, they are motivated, they are sophisticated, and they are wealthy. And they understand that this is a rush to accumulate metal. And in an environment where paper prices dominate and rule and no one challenges the West, it's changed very rapidly to he who has the commodities, or she who has the commodities wins. And that's what's happening, and they do that through delivery. And it is overwhelming a system that has been rehypothecated, where the same contracts are sold over and over and over again. Easy to do when no one stands for delivery and you have enough money to write checks, but not easy to do when people say, yeah, no thanks, I'd like the real thing, thanks, and stand for delivery. Case in point, TD Bank, who's very short in the overall scheme of things in London and on COMEX, and they came out 3 weeks ago and sent a letter to all their investors saying, we believe silver's devilish blow off top, always framed in a negative connotation, has reached its peak and is heading towards $40, told everyone to short. We are going largely short, they say. We believe silver's heading to $40. They got stopped out last Friday at $92 at a huge loss to them. And these things, raising margins, rhetoric, negative rhetoric, telling everyone we're going short, lease rates expanding, none of this stuff, which always would have crippled the market as it did in 2011, it's not working now. And prices are just running. And people who have been ridiculed by friends and family, by financial advisors, what the hell do you want that stuff for? It doesn't pay interest, they say. Why would you buy that? Are finally being vindicated. And it's a lonely feeling, Charlotte. The people who come here like to talk because they finally have people around them who understand that they're like-minded and get it, and they can have real conversations. Whereas I go into Thanksgiving dinner, my wife says, don't you dare say a word as we're walking in the door, not one word, because I want to stay through dessert. She'll say to me, I'm okay, I won't say a word. But the point is, the public hasn't received the message. The people who have been here year over year have invested accordingly and have felt isolated, alone, wondering if they made the right decision, and to see what's happening now, which is a function of mathematics and logic, which always seem to work out over time. You can't hide from Mother Nature, nor can you hide from mathematics. You can run and you can inject variables and you can do all you can to evade, but just like Father Time, it catches us all, as does mathematics, as does Mother Nature. When you suppress interest rates the way the West has for a long time to create this illusion of wealth in your real estate, in your 401k, but creates distortions in asset prices, misallocations of resource and capital. Yeah, I'll hire 50 more people. I'll build a new division. I'll rent some more real estate for our business, or whatever it may be. I'll buy that second investment property. Those distortions come back to roost over time. And that's what we're seeing right now, that, these distortions that have affected metals prices for so long are now, in my mind, finally being exploited through delivery. And what's really interesting is that the biggest money in the United States is standing for delivery at levels no one has ever seen. And that's manifesting into much higher prices. And it's really heavy to see the people here, I mean, some of them in tears, saying my life has been changed forever. It's very heavy. Like, I invested $300,000, a lady said, I was just telling you downstairs, she said, I flew here to meet you. In tears, couldn't speak, like she couldn't speak. And she said, I flew here to say thank you to you, that I'm a millionaire now since May, and I put my life savings in because I listened to you. Of course, it's being better than chased with pitchforks, but I will tell you, it's very surreal. I've done this for 36 years. I've been coming to these conferences for half that time. Not only is the amount of people here exponentially greater, but the vibe is surreal. And you know what? I just want to say to people, in a market that's moved as fast as this has, short-term caution is always prudent, right? Nothing goes straight up without taking a breather, but you can still coexist, that can coexist with long-term bullishness. And I am hugely long-term bullishness, but yeah, anytime things move to this level, got to be careful. But I'll tell you, to your question, it's so far different than anything I've ever seen. It's absolutely off the charts, and it's very surreal.
Yeah, it's definitely a really interesting mood here. And I want to talk a little bit more about that repricing angle when it comes to silver, because we always ask our audience for questions before we come to these events. And that was one of the ones we got, is this a repricing moment? What does that mean? And I think it's interesting what you're just saying right now, because I'm also seeing people, now that we got to this triple digit level for silver, they want to take profits. And some people have been in for a very long time or selling at least some of it. So can you talk about that repricing and what that actually looks like?
Yeah, I mean, well, it's being repriced in the respect that you're finally finding equilibrium between real supply and demand. Unfortunately, the market has been controlled by paper derivatives, where the ability of the Western banks, 8 of them, in silver, 8. One or two in Canada, 3 or 4, 2 or 3 in Europe, and 5 or so in the United States, have maintained the largest concentrated short position of any commodity ever traded in the 1,000+ commodities on COMEX ever. Let me say that again. The largest concentrated short position of any commodity ever traded on COMEX. Why? Why? And to me, that's the first question. And the answer is, in my mind, because of the military-industrial complex. The West has ruled the world through strong military. The amount of silver needed in high-tech weaponry, from cruise missiles to F-35s to stealth bombers to submarines, nuclear submarines, all this stuff, and these really, really high-tech weapons now that are going Mach 3, Mach 5, whatever they are, the hypersonic missiles, the heat that is generated in the cone of the missiles is so extraordinary, the only thing that works is silver. And the military-industrial complex doesn't care about the price, right? Because if you need 500 ounces in a high-tech weapon, cruise missile that sells for $20 million, what the hell do you care what the price is? It's more along the lines of the rest of the world understanding how important and vital it is in everything, not just military, digital, electronics, you name it, let alone the monetary aspect of it. What I think the only thing people need to understand, and I will say this to you all, the only thing you need to understand is who the hell is standing for delivery every single month on COMEX, every month, for billions of dollars worth, billions upon billions upon, in December. It was the largest delivery in the history of the COMEX market for silver for a December contract, like 65 million ounces. So far in January, which is not a primary delivery month, we're over 40 million. So in the last 40 days, we've seen, 120 million ounces nearly stand for delivery. Who's doing that? A mint box of Silver Eagles is 42 pounds, 500 ounces. Who's buying 110 million ounces? And I think when you understand this, when you look at the deliveries off of the LBMA and the massive deliveries off of COMEX, what I would say to you is that the most well-funded, but more importantly, Charlotte, the most well-informed. People at that level don't do this for the hell of it, right? If you're dropping billions and billions, do you not think you know where it's going? Are you not really connected to the inside when you're spending that kind of money? And I would argue it's not a one-off. It's been every month since Trump won the election. And then what do you know? Silver's now a critical mineral, as now reclassified by the government. And what do you know? They just said, we will put state-sponsored price floors underneath all critical minerals within the next 90 days. That was a law that was just passed last week. That is to incentivize domestic mining of all of these critical minerals because, prices are where they are. If there isn't a floor at a high enough level, you can't incentivize domestic mining for things that are becoming harder to find. And then they just came out and said, now there is a proposal in front of the House and Senate. It's cleared one of the chambers. I think the House has to now pass the Senate, saying we need to build a strategic stockpile of all of these minerals. What you are seeing is not two brothers in 1980, the Hunt brothers, trying to corner a market where same environment, they see way more paper than bars, and they're supposed to be one-to-one. Well, wait, if I buy all these paper contracts, but there's not as many bars back there, well, what if we stand for delivery? What happens? Price goes way up. Well, the exchange changed the rules on the Hunt brothers. They said you can't be that long, but you can be short as much as you want. They had to sell the contracts. 2011, it was about leverage and the leverage that speculation. So what did they do? They raised margins a bunch of times. And if you raise margins on the COMEX, meaning you have to have more in a margin account than you did the day before, they keep raising until the people who are on margin are forced to sell, which drops the price, which begets more selling, and the price collapses. Didn't come back for 15 years. On Christmas Day, about a week before this year, they raised margins. On Christmas Day, you needed $21,000 in your margin account to hold 5,000 ounce silver contract. Silver was $60, roughly, on Christmas Day. The next day, they raised it by 30%. If you don't pay, we're going to unwind and liquidate your account. So now you have to put $47,000 in your margin account. $27,000 in your margin account. The reason I said 47 is today it's $45,000 an ounce to control 5,000 ounces. A company like mine will have 2 million ounces of silver at any given time. If it costs $45,000 to hedge my exposure, meaning the margin account means I short 2 million ounces on paper, on COMEX. I have 2 million here, I short. If the price falls by $10 an ounce, I'm down $20 million. I'm out of business. But what I sold short goes up by the exact same amount. But in order to maintain that position, I have to have $47,000 per 5,000 ounces. You have to have millions. That's before the gold, 35 or 36,000 for one 100-ounce gold contract. Well, what that does to the speculators, the people who might be very wealthy, but they're not wealthy like sovereign central banks, sovereign wealth funds, Tesla, Samsung, Sony, who don't play on margin, these people get shook. And all of a sudden they have to sell to cover the margin requirement. Maybe they have 50 contracts and they have 20 million in their margin account. And all of a sudden the price jacks way up on margin and the price of silver is moving up $7 on Friday. It's up right now, and just as the market opened in Asia, it's up $3. They're going to get margin called again. So they sell. The weak hands sell. They're forced to. And what happens? The big money who is not on margin comes in and says, yeah, we'll take, we'll take the 50 million ounces of silver. Every single month for the last 15 or 16 months, between, 30 and 50 million ounces of silver are standing for delivery every single month. And ask yourself, who the hell is doing that? And where's the mainstream talking about this? Why do I have to scream about it every single podcast I do? This is so far unusual. It's 4 feet of snow in Death Valley in July. It doesn't happen. And all I can tell you is that that's all people need to know, because these are the most well-informed traders on the planet who are literally standing for delivery for billions upon billions upon billions upon billions of gold and silver. Don't tell the public. And the public doesn't know. The only thing they see is negative. It's overbought, the devilish blow-off, we're shorting, the top is in, and it keeps on going. And all I can tell you is that it seems to me this is being repriced, where you have assets now being repriced via sovereign demand by countries and nations who understand that it's not about dollars and promises from an insolvent country like we are, holding our treasuries. Instead, it's about who has the commodities wins. And that's what's happening. You can see it if you open your eyes.